Okay, let's dive into the wildly contradictory story of a crypto project called Onyxcoin, or XCN. This is a project that truly lives a double life. And, well, you're about to see exactly what I mean.
On one hand, you've got this number, $2.1 million. That's how much was stolen from its protocol in an absolutely devastating hack. Yeah, an amount that would be a death sentence for most projects.
But get this, just a few months later, despite that massive loss of funds and trust, the project made one of the boldest promises you'll probably ever see in this space.
And that promise was a massive 25% annual yield. So, fresh off a catastrophic hack, they turned around and offered this incredible return to anyone willing to bet on their comeback.
It's a classic crypto paradox, isn't it? So which is it? A project with fatal flaws or a sleeping giant that's about to wake up? Let's break down both sides of this coin, and we'll start with the reasons for some serious caution.
The argument against Onyxcoin, it's powerful. And it all begins with this catastrophic security failure that really shook the project right to its core.
Okay, so on November 1st, 2023, attackers found a crack in the armor of the Onyx protocol. They managed to exploit a single vulnerability and just drain the whole thing of assets worth a staggering $2.1 million.
So how'd they pull it off? This wasn't some brute force attack. It was way smarter than that. They basically used the protocol's own rules against it. First, they proposed a new, obscure market with almost no trading activity. Then, they put in a tiny deposit, which gave them this huge, outsized control over how the pool calculated value. And finally, they exploited a simple rounding error in the code to trick the system into letting them borrow millions against collateral that was, well, basically worthless.
And this really gets to the heart of the problem. The vulnerability was what's called a precision loss error. Think of it like a calculator that just drops the last few decimal points. For most things, no big deal, right? But for these attackers, that tiny little error became a multi-million-dollar backdoor.
The aftermath of the hack was absolutely brutal. You look at the market data from early 2025, and it painted a very grim picture. The MVRV ratio, a metric that basically tells you if investors are in the green or in the red, was deep in the negative. Most holders were underwater. And open interest, which is the total number of bets on the token's future price, it had just plummeted. Confidence had totally evaporated.
And yeah, the analysts were not mincing words. Even with the price looking like a bargain, the on-chain data was screaming that the pain might not be over. The sentiment was just overwhelmingly negative.
So, a devastating hack, terrible market sentiment, that should be the end of the story, right? Well, not exactly. Let's flip the coin now and see how the case for a massive comeback started to build.
Because despite this foundation of flaws, this really powerful wave of optimism began to build around the project's incredibly ambitious future plans.
And this wasn't just talk, you know. In early 2026, the market suddenly came roaring back to life. The price surged over 32%, trading volume exploded by more than 400%, and an incredible 75% of all that activity was from buyers. The sentiment had completely 180-degree flipped.
So what was driving all this hype? Well, it was like a perfect storm of good news. First, you had the whales, the big investors scooping up over 120 million tokens. Then the project announced some new strategic partnerships. They made a really clear commitment to regulatory compliance, and it was all building towards one massive event, the launch of the Goliath mainnet.
The project's roadmap laid out this whole new vision. It detailed a series of upgrades focused on compliance, on scalability, and even integrating AI. But really, all eyes were on one date, March 27, 2026, the day Onyx planned to completely transform itself.
So what is the Goliath mainnet? Look, this wasn't just some simple update. This was a total reinvention. Onyx was evolving from being just an application running on top of other blockchains, what we call a layer 3, to becoming its own independent foundational blockchain, a layer 1. And that is a huge deal because it meant the XCN token would go from being a simple asset to being the essential gas that powers the entire new ecosystem.
And how were they planning to get people to use this new ecosystem? By bringing back that audacious number. They promised a massive 25% annual yield for staking. That's one of the highest ever offered for a Layer 1 launch, all to bootstrap activity and lock up as much supply as possible.
So here we are. You've got these two powerful, completely opposite stories, a history of epic failure and this vision of a groundbreaking future, and they are colliding at this one critical moment in time.
This table really lays it all out, doesn't it?
On one side, you have the ghost of that hack, the history of negative sentiment, and that weak market data. But on the other side, you've got the game-changing Goliath launch, that insane 25% yield, strong partnerships, and a clear roadmap. It's a past defined by a critical failure versus a future defined by a total foundational reboot.
And just before the launch, the technical analysts pointed out something really fascinating. They used this metaphor, the alligator is sleeping. What that means is the price was coiled up tight like a spring, volatility was super compressed, and the market was just building up energy for a massive move. The only question was, which direction?
And that brings us to the final, critical question. This Goliath launch, it wasn't just a software update, it was the moment of truth. A single event where the market had to finally decide which story it really believed in. Was this going to be Onyxcoin's redemption or its final reckoning?